If your bank collapsed tomorrow, how much of your savings would actually be protected? Most people think they know the answer, but from 1st of December 2025, the protection limit is changing. And for some people, this update will safeguard their future, while others will discover they were never protected at all. Why this matters? So let me show you exactly what's changing and why this new FSCS limit is a big deal. Never again. Remember bailing out the UK banks in the last financial crash in 2008? Back then, income was easily self-certified. Borrowers could simply sign to confirm they earned enough to repay a mortgage. Even people with CCJs, defaults, previous repossessions were being approved for high-risk loans. These reckless lending practices fueled financial instability and, ultimately, the 2008 crash. Today, the UK has much stronger consumer protection in place, and from 1st of December, that protection is increasing again. The big announcement. Here's the headline everyone needs to hear. The Financial Services Compensation Scheme FSCS protection limit is rising from £85,000 to £120,000 per person per firm. This means that if your bank, your building society, your pension provider, or your investment platform collapses, the FSCS can protect up to £120,000 of your money. A very real improvement, especially after the economic turbulence we have seen since 2008. But a crucial reminder, FSCS protection does not cover market losses. It only steps in if the financial institution itself fails. Good news, with a warning. Now, here's the part most people miss, and it could cost you everything. This new £120,000 limit is fantastic for savers and investors. But it only applies if your money is held with a UK-regulated, UK-authorized, FSCS eligible financial institution. So if you are using an overseas broker, a crypto platform, an unregulated trading app, an offshore pension or investment provider, then FSCS protection does not apply at all. And to make it even clearer, FSCS cannot protect you from market drops, volatility, crypto losses, poor investment decisions. It only protects you from institutional failure. Who this helps and who it doesn't. Let's break this down into real-life examples so you know exactly where you stand. The increase is excellent news for UK savers with cash in banks and building societies, anyone with ISAs, pensions or investments on UK-regulated platforms, UK-authorized investment platforms, people spreading money across multiple FSCS-protected firms. But it does not help you if you use overseas investment platforms, non-regulated apps, crypto exchanges, offshore pensions or bonds, banks that secretly share a license with another brand. If the institution is not UK regulated, FSCS will not step in. What FSCS actually covers. So what exactly is protected and what is not? Let's make it simple. FSCS does cover bank and building society failure, investment platform collapse, insolvent pension providers, cash deposits up to £120,000 per person per firm, certain personal pensions under long-term insurance rules. FSCS does not cover crypto, market volatility, poor investment decisions, share banking licenses, counting as separate providers. This is why spreading savings across UK-regulated firms is still essential. The 3 essential things you must know. If you remember anything from this video, let it be these 3 points. FSCS protection only applies to UK-authorized firms. If the firm is not authorized, there is no safety net. FSCS protects you if the firm fails, not the market. Your money can still fall in value. Some banks share a banking license, meaning multiple brands can count as one single firm. These free details could save you thousands. Why the FSCS rise is good news. But let's be fair, this is still a win for UK consumers. At a time of rising inflation and economic uncertainty, increasing the protection limit strengthens consumer confidence, financial stability, banking trust, and long-term peace of mind. More of your money is now safeguarded, and that matters. What to do next? Here's your next step, and it only takes 60 seconds. If you want to check whether your bank, pension, savings provider, or investment platform is UK regulated, FSCS authorised, covered under the new £120,000 limit, send us a message. We can check it for you quickly and clearly. Let's make sure your money is protected properly.